All right, what's up, Tycoon? Super excited for today's video. We're going to go ahead and give you a VIX market update, okay? This is the volatility index, also known as the fear index, all right? The reason that I chart up the VIX and pay attention to the VIX every day is it is based off of the S&P 500 option contracts, okay? So it's going to let you know if the market is hedging, okay? And if the volatility index is rising, most likely you're going to see the S&P 500 start to drop, okay? Sure enough, we're seeing that again today. All right, these ovals up here are the Fed meeting and rate hikes. Okay, so each time we have a Fed meeting or there's a really bad CPI report or something like that, or a rate hike, okay, we're up here on the VIX between 31 to 34.55. Okay, and if you've been watching my videos, I've been saying that, hey, we could repeat that pattern and head back up to those price levels, right? Now, currently, the best time to be buying in the market, okay, if you're looking to do like a long swing trade or find an entry to go long in the market, has been when the volatility index has been up here, above 30, okay? When it's at 34.55, up here at 37, 36, these are the areas where you want to go long in the stock market, all right, because you're buying into the fear. You're buying when the fear index is very high. Okay. Warren Buffett, a lot of these people are famous for these quotes, you buy when there's blood in the streets, right? Buy when everyone is fearful and selling. All right. But the key thing we have to keep in mind, okay, is I'm not positive that we've hit peak fear in the market. Okay. Once we hit peak fear, I think that may be when we get our official bottom in the stock market. Okay. Now it has bounced very nicely off of its bottom, but this could be a dead cat bounce that is over, right? And we could be making new lows after September. Okay. So we're going to go ahead and jump right into it now that you guys have a little bit of an understanding of why we're going to be paying attention and why we think that the VIX may repeat that pattern of going back above 30, possibly up to 35 and 38. Okay. So, this is the daily chart we've been on right here. We'll go ahead and zoom into the 1 hour chart now. All right. And I do VIX updates in the Options Trading Tycoons Discord all day. Me along with the admin, trader tycoon Leon. All right, we're both constantly watching VIX every single day, looking at our levels, and it helps give us market context and clues of when we should be bullish or when we should be bearish. All right, now on the 1 hour chart, there's two things I want to highlight. All right, we have these gaps down. Okay, now the way these gaps work is they fill about 90 to 95% of the time historically. So originally this gap was this big. Okay, this giant blue box was this gap from this candlestick to this one. Now we have filled pretty much most of that candle. Okay, but it's still valid and it's still something to look out for because we did not come all the way down. Okay, and then again today VIX skyrocketed up, okay, created another daily gap or 1 hour chart gap. All right. And this gap, again, has a tendency to fill 90 to 95% of the time historically in the stock market. Okay. I love watching these VIX gaps. I love charting them up. They really give you an edge in the market. Okay. When you can tell, and for instance, tomorrow, let's see, we see a breakdown of this 24.49 level, right? We see a breakdown of 24.49. We see that we flip that, all right, from a support level, right? We come down and test it, flip it to resistance, and we see a very nice big red candlestick heading towards the gap. All right, then we may want to look for some bullish plays because the momentum has changed and we're going back down towards this gap where the price is going to be drawn no matter what. Now, do I think that these gaps are going to fill anytime soon? Honestly, not. Okay. If you have been watching these videos with the VIX updates, I've been saying that, you should be, possibly looking at some VIX 30 call options as a hedge for FOMC, right? We wanted to see VIX continue the momentum, right? And look at what it was doing in the past. It was being valid resistance, okay? So VIX was bearish. The market was performing very well last week, all right? We're getting rejected at our lines here at our key levels. We're coming down, testing them as support, flipping them to resistance, right? Coming down, testing key levels, flipping them to resistance, right? Well, now since Monday, all right, and it's FOMC week, we're seeing volatility rise in the market. Okay, the VIX was just bottoming out at $22.41 and hit highs of 25 today. All right, so it's already up about $3 really about $2 at the time of this recording. Okay. But this is what I'm going to be watching for. Okay. We're going to see, is VIX going to stay bullish, right? And if it does, you can expect the S&P 500 to be dropping. Okay. Now, will the VIX go all the way up to 35 or 40? I don't know for sure, right? It really just depends on what really happens and how the market tends to react towards this rate hike. Okay. Now, in my opinion, we've been pricing in the 75 basis point rate hike. Okay. That's all we've been talking about for the last month since the last FOMC meeting. Okay. So that should be priced in, but that does not mean that the market will react well, right? There's a lot of uncertainty in the market. Okay. The first one, obviously, FOMC. Okay. Then earnings. All right. We just had Tesla do earnings. We just had Google, Microsoft do earnings. Tons and tons of huge companies this week are doing earnings. And that's going to provide a little bit of uncertainty. Okay. The market doesn't like uncertainty, and that's why we're seeing the VIX rise. So that's the second thing bringing some uncertainty. The third one, all right, is really just going to be whether or not we are officially in a recession. Okay. That's another one. We get the final report comes out, I believe, on Friday. So we'll get to know if officially we are in a recession. Now, this is super interesting because basically, the Fed and they just came out today saying that they don't think it's going to be a recession, even if we get two negative GDPs, all right, consecutively in the quarter, which that's the textbook definition of a recession. Okay, so you gotta be able to see what's going on here. The country, right? The Fed is scared of this, right? And they don't want to scare people. And they've been saying, oh, inflation's transitory, inflation's transitory, inflation's transitory, right? They're pretty much calling this recession transitory, right? Oh, like Yellen goes on there today and she's like, hey, it's just a transition. So they're got rid of transitory, that word now, right? And we're using the word transition. Okay. So yeah, basically we went from transitioning to not being in a recession, having booming economy, right? So yeah, we're in a recession now. So it's really hard to tell how the market's going to react when you have the media, right, and the people owning the stock market, right, are the ones pushing out this media and paying the media organizations to broadcast these things. So you have to think about that. So it's really hard to tell whether the market is going to go up or down. Currently, they're all trying to push off this inflation or this recession thing, push off inflation, not have to raise the rates as much as they probably should. And if that's the case and they keep just trying to push everything off, we could see this market continue to rally. Okay. So we have those gaps down to fill. All right. It would be the juiciest opportunity. All right. If you can get in above 30 on this. All right. So if you can wait for VIX to come up here to these levels, all right, 31 to 35. All right. And we still have those gaps down. I'm going to feel really strong about going long in the market. And just waiting for the VIX to eventually come back down. All right. And repeat its pattern. All right. Because as we can see here on the daily chart, again, we have some very, very sharp drops after we hit these levels. We go from 34.55 all the way down to 24. Okay. We come here again, 34.55, drop all the way down to 22. All right. In the past here, we come up to $37, come down to 18, right? Drop 50%. So, it's like I said, it's interesting. All right. So these were all the levels that I'm watching. Hopefully you guys liked this video, understood it. Hopefully it made some sense to you guys on why we saw the market pull back. VIX was just raging all day. Okay. We went from $23 yesterday, all right, up to the highs of 25. A $2 move in VIX is definitely going to cause a drop in the market. And just chart up these gaps, be prepared for them, set some alerts. All right. Maybe you can catch the scalp, a nice little scalp move or something like that. Or you can do like I said and just try to wait for the volatility index to go up to 30, 35, above those prices, and look to start going long in the market, because that's when there's a lot of fear and that's when a lot of stuff potentially is going to be oversold. All right. No financial advice. This is just, a breakdown of my technical analysis and my opinions. And if you enjoyed them, like them, make sure to like, comment, subscribe. And I do viewer requests every single week. Okay. So if you want to see your stock in the next video, make sure to comment below.